Well, for more, I'm now joined by Viktor Katona, lead crude analyst at Kpler. Victor, hi, thanks for joining us. Now, Fatih Birol of the IEA said this morning that with this cut from Saudi Arabia, there's now a much higher risk of the oil price rising steeply towards the end of this year. Do you think he's right?
I think in a sense, yes. However, I would like to highlight that the production cut is just for 1 month. All the other decisions that were taken in the OPEC Plus meeting here in Vienna are really largely just OPEC Plus housekeeping. They're getting their production targets under control, aligning it with actual real-life data and not some made-up phony numbers that existed before. So in a sense, we don't know what's going to happen after July. If Saudi Arabia actually decides that it wants to just reap the rewards of the prices which are back at $80 per barrel, then it might just bring up the 1 million barrels per day, and that's it. That's the that's the end of the story. And it was just a brief romance with 80. So ultimately, we don't know, but I think that we shouldn't really expect triple-digit prices. Whatever's going to happen in the upcoming 6 months will be between 70 and 90. I would say that's the bandwidth that we're talking about.
This is a pretty substantial cut, though, isn't it, from the Saudis? So what are they trying to achieve here?
I mean, it's very altruistic if you think about it, because everyone else would be just enjoying the benefits of a higher oil price. I mean, Brent is nearing 80 as we speak. And the Saudi Arabia is just struggling. I mean, it's not reaping the rewards that it should be. But, and I think that's a very important but, in the background, Saudi Arabia has been working to rearrange OPEC Plus to its liking. And one might actually see the production cut as a pledge to commit to this change. For instance, West African countries have been very reluctant to change whatever production target they have. Saudi Arabia sacrificed itself for just 1 brief month. And, ultimately it managed to persuade all the West African countries to lower their production targets. So in a sense, it's a quid pro quo. You give me something, i.e. more flexibility with the production, and I will cut production for 1 month and lower the price for everyone else. In a sense, in terms of controlling OPEC Plus, I think there has never been a period when Saudi Arabia controlled it more than it does right now. It's very much leading the pack.
What role is Russia playing here? Because this level of oil price is also convenient for Moscow, isn't it?
Absolutely. I mean, Moscow is enjoying the fact that it's not in the limelight, right? Novak wasn't even at the actual press conference, which was held afterwards. He was just holding one-on-one conversations. Moscow and Russia in general also wants high oil prices. It also wants the stability and also wants to enjoy the predictability that the future production targets provide. Moscow doesn't want a high oil price, though. If high oil prices are above 90, then all the oil price cap discussions, they resurface. So what effectively we have right now, the $80 per barrel for Brent, is ideal for Moscow. It didn't do anything publicly, ultimately reached whatever is ideal for the government.
Do you think then, given that the oil trade remains very profitable for Russia, that the Western policy of capping the oil price to try and hit Russia's revenues is failing?
Not necessarily, but the West should adapt to changing realities. And that changing reality is that now the Russian government is effectively setting how much oil companies will be taxed. This is something which the oil price cap didn't account for. No one could imagine that this would happen, but it's the absolute reality right now. So if the sanctioning coalition wants to change its attitude, it needs to take this into account.
Viktor Katona, lead crude analyst at Kpler, thanks so much for that insight.